Well, one of the possible beneficiaries of the North Korean story, gold, record highs for the precious metal in recent weeks as risk averters, it says, but I've never, is there such a phrase as risk averters? People who are risk averse have bought into the metal's safe haven status. Ben Davis is the CEO of Hind Capital. He's joined us in the studio. Ben, good morning to you.
Good morning.
What do you think the prospects are? Yeah, well, there you go. What do you think the prospects are for gold to go a lot higher from here?
Obviously, I'm biased. I run a gold fund, but I think it goes beyond risk aversion and safe haven. You know, for us, it's a cash supplement. It is money, and with central banks around the world denigrating their balance sheets at an alarming rate, whether it be the ECB, the US, or the Swiss National Bank even in recent weeks. I think the reality is there's so much currency, well, not in circulation as yet, but there's been such a proliferation of currency, and I think that's where the bubble is. As a consequence, gold is very undervalued, and I think it's going to go much higher in price.
What does much higher in price mean, though?
Well, I could be really obtuse and say 36,000, which would probably give you...
That's very obtuse.
Yeah, but actually it's not as ridiculous as it might sound, because if you took all the Fort Knox gold that's purported to be there and were to revalue gold at 36,000 an ounce, that would pay off all the debts in the US, which is probably 600% of GDP if you include all the unlimited liabilities.
Why not buy, I mean, I buy the argument, okay, but why not buy silver or platinum or palladium or some of those other precious metals that have an industrial use as well? Because the problem you always come to with gold is what else is it except a store of value at this stage? At least those other things have some industrial use. We're at a stage here where the involvement in gold purchasing is completely disconnected with the jewellery uses or any other industrial uses.
Yeah, I mean, for me, gold has never been particularly about fabrication anyway, jewellery fabrication. You know, our argument's always been that gold is money. So silver, yes, you could perhaps argue it has a monetary element to it in terms of if you were to use it in physical format, excuse me, and to use it as coinage. You know, it's easy to carry around, it's portable. But in terms of, well, I'll give you an example. Every great dynasty in history, you know, whether it be the Rothschilds or Morgans, they've come out of every crisis owning large amounts of gold or forestry or lumber, and they've then put that to work in the markets, whether it to be by cheap assets, which, as we all know, is what comes after the purging of a war.
You were talking earlier on about gold as a substitute for cash in circulation and so on. But isn't the issue here that, although central banks have printed a load of money, it's not in circulation, and it only becomes a problem if that money is allowed to go into circulation. If, as we start to see the economy recovering, however many decades into the future that is, that we then get central banks draining the liquidity that they've injected in the way that the Japanese did, for example, a few years ago, doesn't that then negate the argument for the gold price going up, because money maintains its value, basically?
Yeah, I think it's a salient point. I think the reality is, if you look at the way stock markets and risk assets have performed around the world, I would say that's the invisible signs of inflation. I actually think a lot more money's got into the system than perhaps has met the eye. Central banks and governments are clearly very good at obscuring the facts. I'd say the best performing stock market in 2008, guess what, was the Zimbabwean industrials, up 30,000%, and at the time that was running way ahead of any inflation. So I don't think it's churlish to say that some of that money has found its way into certain asset classes, and particularly asset classes that have a small float, and obviously gold has a small float. I mean, I would say that in, I use, sort of digressing slightly, but we always look at Hind at valuation metrics on a relative basis, and a house in Chelsea in 1980 cost 180 ounces. To purchase that same house now is 5,000 ounces. Now, you tell me which one's wrong. And with rates at zero, I don't think housing's coming down anytime quickly. Maybe in real terms it depreciates, but in nominal terms I think it will probably continue higher.
Let's move on to me. I'm looking at your interestingly named investor presentation. I won't repeat that. Very novel though. And just looking at slide 13. Most central banks hold little gold, and talking about India, China and Saudi Arabia, who hold very small percentages, and comparing that with, say, US, Germany and France, who hold 75 to 88% of their reserves, assets in gold, allegedly. Now, presumably, the latter are going to be selling it down and the former are going to be buying aggressively. But you're centering on the fact that the Saudis, the Chinese and Indians are going to be buying aggressively their holdings, getting them up, yeah? But presumably that demand is going to be satiated by sellers from the developed world.
If you were a developed country now, would you be selling down your gold holdings?
Dare I say it, if I was looking at the history of the sales of gold holdings, I wouldn't make any judgment about not selling it now. Yeah. Bearing in mind, Gordon Brown sold it at, what, $300 a troy ounce?
Yeah, the brown bottom, yeah. Historically, that would be the precedent. I would say that has shifted dramatically. I mean, arguably, it's debatable whether the Americans have the 8,000 tons of gold. I don't know. Obviously, there are names such as Gatter who are, through the Freedom of Speech Act, are trying to find out whether that's the case, and I think that's important to ascertain. There hasn't been an audit done since the 50s. I personally don't think that's the case. I think what you're just going to see is those holders are going to keep it because they can see that, that we have acute sovereign issues, and I sincerely believe that, as you say, the lesser developed countries are going to increase their holdings. I mean, if you, reserves, currency reserves that have grown to 8 trillion. I'm not sure what that increase is over the last 10 years, but perversely, gold holdings have gone down, as you would probably expect. So I think there needs to be some redress there.
Well, isn't it the case that last year central banking institutions sold record amounts of gold? They also bought record amounts of gold, but it's incestuous. They're selling it themselves. The IMF basically sold all of the gold that central banks bought last year, and looks like they're going to do so again this year. So aren't we just churning around the central bank community, and the IMF clearly today is not wanting to hold gold. It's announcing sales on an annual basis.
I'm going to beg to differ with you there. I mean, under the CBGA, the central bank gold agreements, they sold well short of their 500 tons of gold.
Ben, can I wrap you up?
You can wrap me up?
I've got to let you go, but thanks so much for that. Ben Davis, the CEO of Hind Capital.